Welcome to the Genius Wealth Show. Genius Wealth Show is dedicated to help individuals and traders understand trading and stock market in a genius way, and we bring people like that only who can help you with that. So today we have Chetan sir, whose student I am. I have learned options from him, and I love the way he teach. First of all, so I think I should take a moment and appreciate that. And today we are going to talk about markets in general. We are going to dive into the mind of a hardcore trader. And I'm sure if you are a trader, if you are involved in markets, you are going to find this episode very, very useful. Watch this till the end and let me help and please help me welcome Chetan sir right here. Hello, sir. How are you? First of all, thank you so much for being on the Genius Wealth Show. And how are you, sir?
Thank you, Himani, and I'm absolutely fine rocking. So let me tell my viewers, she's one of my youngest students, and she's learned option at the age of 18.
Yeah.
So nice to see the young India coming up in a big way.
Yes, thank you so much. And I think it's very important as well for taking the education first approach. And that's how my journey has been like that. I didn't try trading and learning, I tried learning and trading. So
Lovely.
that's how my journey has been. And thanks to you that you helped me understand so well and so easily. So thank you so much for that. And in this podcast, what we will try is that we'll try to decode markets and we'll try to talk about trading in general, that how it works, what is happening in the market, in the current market scenario, and how can the person or trader watching this podcast can find their edge, find how can they better their trading. That's what we are going to aim at in this episode. So let's get started by this one question, that what do you think about the market right now? What are
Ah,
your scenarios and your views?
so lovely. So Himani, we are entering a period of below average returns. So what do I mean by below average returns? So let me give you a very simple thumb rule. The average returns of Nifty, which is your benchmark index, is your GDP growth rate plus your rate of inflation and plus your dividend yield. So probably if you're seeing your GDP is around 6.5 plus minus, your inflation has come down to, you say, below 3.5, and your dividend yield is 1.5. So if I add the sum, it's about 10.5,
Yeah.
right? So we are looking at, say, 8 to 10% returns on your benchmark. So it's below average. If you see historic returns of Nifty has been somewhere around 13 to 14%. So we need some triggers, probably with this war, the defense budgets going up, probably growth is taking a back seat, and which you will be seeing in the markets in the coming weeks.
Right. Right. So thank you for sharing that. And I think we should get started now with knowing you and your journey. I'm sure it must have been a journey full of learnings and growth. So let's go back a few years or maybe decades back. And what was your journey like? How you came into the markets and how has your journey been till now?
Right. So, Imangi, I started the journey the same age at which you started, around 15, 16.
Wow.
Right. And there are only two types of people who enter the markets: A, who are brilliant; B, who are passionate, but the world sees them as mad people. Right. So I would classify that guy who was passionate, but the world saw he's a crazy guy.
Okay.
He's out of sync. Why? Because when you're talking about finance as a 15, 16-year old, you're probably not with your own peer group,
Hmm.
right? But that's what it is. So probably I believe it was my karma or it was my destiny. I got fascinated with the markets. I saw that when I used to read the newspaper, the finance, we had two pages, and what intrigued me was how is the prices moving, and that is what it is. And it started coming in, and that's how the markets journey started.
Okay. Can I ask how many years back this thing was?
So right now I'm 48 years young. So you
Okay.
can calculate, say, from 15 to 48. I think
Wow.
you'll get the answer.
Wow, 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 awesome. Absolutely crazy. So now since you have got this much of experience, like it's like more than 2 decades, right? So with this much of experience, and you have saw a lot of types of markets as well, where do you think retailers go wrong? Because according to SEBI, as we know, 95% of retailers lose their money. So even if so much content, so much knowledge is available around the internet, even for free and for paid, where do the retailers go wrong?
Very nice question. See, any person who goes with the emotions of making money, running a house, or any such emotions or expectations without the proper backup of a business model, which includes your risk management and your money making model, you're bound to fail in this market.
Okay.
So, one of the common mistakes what I've seen in retailers, they start as traders, right? But they don't have a stop loss. So, moment they get stuck up, they become forced investors.
Hmm.
And what happens is that investment takes and drains out their capital, they drains out their patience. So supposing I bought something at 100 and it has fallen to 50, and after 3 years it comes back to 100, I just come out of 100 because I'm drained out.
Hmm.
So what's very important is first understand who you are. If you're a trader, be a trader. If you're an investor, be an investor. Second, you should have reasonable expectations. If you
Right.
set unreasonable expectations in terms of your returns, probably, I think so, uh, God help you. And that's a common problem. People come
Hmm.
with small capital and they have unrealistic expectations.
Right. 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 So expectations ki आपने बात की, and I somewhat I definitely agree to that. Next question that comes in my mind is, I have heard a lot of people saying that trading is very thrilling, but I somewhat feel that traders almost get addicted to that thrill, and instead of seeking results, they are addicted to the thrill, and the boredom actually scares them. So is that do you think the reason, one of the reasons maybe, that traders go wrong?
So one very simple thing is probably the gaming theory.
Okay.
So when this you have this mobile and you have a capital of 1 lakh and you are ready to buy a 5 rupees option and you see going up to 10 rupees, it automatically gets you the thrill
Hmm.
because seeing your trade double in a few minutes makes you believe that you can repeat this time and again.
Okay.
So what has happened is there was a cult created by the lobbies where you had daily expiries and people got addicted to it.
Hmm.
And what has happened is there has been a wealth erosion of people. And now, with the proper knowledge and guidance which SEBI has given, people have understood that expiry date trading has some very big risks. So, very important, please get yourself out of this thrill factor and make a business model if you want to survive as a trader.
Right. 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 So let's get into the mindset now, mindset part of it. I've heard almost everyone say that mindset is more important than strategy. Do you agree to that?
So, if you were to ask me, Himani, I would say there are three pillars,
Okay.
right? The pillar number one is a trading strategy. That is 20% of the game,
Okay.
only 20%. 40% is your discipline,
Hmm.
discipline of execution, and the other 40% is your money management.
Okay.
So, this gambit of discipline and money management, if I were to combine, it comes to your psychology, which is you're talking about mindset.
Right.
So, as a trader, my plan of how much capital I want to risk per trade in terms of maximum loss, how much psychological I'm comfortable in taking a position and going to sleep. This psychological aspect of mentally preparing yourself for every day, knowing what is your edge and then putting it into a trading system
Hmm.
is going to be the key for your success. So please remember this: 20, 40, 40. Your
Right.
trading system is 20%. So even if you don't have a good trading system, Emani, but if you have very good discipline and very good money management, you can still
Hmm.
be a break-even trader.
Okay. But what does it take to become the profitable trader?
Okay, so there are four steps to achieve that journey.
Right.
So step number one is a unprofitable trader. So his prime characteristic is he doesn't have a method. He
Hmm.
doesn't have a stop loss. So by default, he's booking very fast, has a very big stop loss.
Okay.
Stage two, you become a break even trader. You take knowledge, you are trying to apply that knowledge. What is a break even trader? You are seeing small losses, but you're booking small profits. You're not able to
Hmm.
let your profits run,
Okay.
right? You are still not confident about the markets. So after that, you are coming down to the third stage, which is a profitable trader. So
Right.
profitable trader now understands the market. Is able to hold on to his profits, big profits, small losses. He has a method,
Hmm.
right? In the fourth one, which I call is this is my definition. I call a 1% club member. That top of the bracket. That
Hmm.
trader knows himself inside out. He knows a particular commodity. He can see a chart and he can analyze what is that chart telling him the story.
Okay.
He can trade in any commodity. He knows his risk. He knows his reward. He's a very fast learner and he's picking up very fast.
Hmm.
So he's not only profitable, he's experienced and he's got wisdom and he can take himself to any trade in any market anywhere in the world.
Hmm.
So
So,
these are your four stages.
yeah, yeah. Thank you so much for sharing that. I love that. So, when we are talking about the mindset, I think it's very important to draw your attention towards the social media trend, the social media showing the get rich quick methods in to the newbies out there in the market. And what do you think about that? How can the newbie, the person who is just new in the market and they are searching for all these things, what is the thing which is wrong with them and how they can refrain from that, because I think that ruins their market to their mindset to a great extent.
So very nice question. I think so. Always, I believe in you must go back to the basics, go back to the
Hmm.
classroom. So basically, the classroom knowledge, the basic knowledge will tell you to differentiate between who is right and who is wrong,
Hmm.
right? A Twitter profit or a Facebook profit or any social media profit is of no use to you if you don't have the right learnings, right? So you don't follow them.
Hmm.
So if you have the right learnings with your psychology and your mindset, it takes time. You don't become in one day. It might take a few quarters or a few years to understand who you are and what is that right mindset for you.
Hmm.
So it's better you start the journey yourself. And I would always believe that there are no quick fix in life
Absolutely.
and there are no quick fix in market.
Hmm.
So market and life both have to be lived forward
Hmm.
but understood backward.
Wow.
આપણે પહેલા આગળ ચાલીને શીખીએ છીએ શું કે છે માર્કેટ અને પછી આપણને લેસન આપે છે લાઈફનો.
Hmm.
right? So these are the few words in Gujarati.
Yeah, yeah, I absolutely love them, and I think this is going to go as a short as well in my channel, that it can reach to new more people, because it was so profound, so full packed of wisdom. Thank you so much for sharing that, sir. And so you shared about how markets and life go hand in hand, and I heard something on the similar line, that the way you do anything is the way you do everything. So in life, if you are indisciplined, then that behavior will repeat in the market as well. That you will be indisciplined in the way you trade as well. So, what are your views on that?
Absolutely. So basically, I think so. Market has taught me more about life than life itself, I would say.
Oh
Why?
wow.
Because for me, that journey to be successful has taken a lot of time and effort.
Hmm.
And there are a lot of times, like as I told you, when you're passionate, people call you mad. Why? Because you keep on banging on one thing at a time to be successful, right? So it takes time for people
Hmm.
who are passionate. Why?
Hmm.
Because that emotional quotient is also very high.
Yeah.
So I think so. Market has taught me to be very neutral in life also and keep the emotional quotient in check,
Okay.
right? So what I've understood is markets will give you money if you survive long enough to be there. There
Hmm.
will be some very tough times and some very easy times. In between, there will be some tough and some easy. So if you can survive the very tough times, the easy times will throw money at you.
Wow. 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 Yes. So I love this. I love asking this question to traders, that if you were starting from absolute scratch, you just had 6 months of learning, and you had, let's say, 5,000, 50,000 rupees, how would you start? What are the steps that you would take?
So if you were to ask me, had I known this 20 years back, I would have first not started this journey with 50,000
Okay.
rupees, right?
Okay.
For a very simple reason, probably that business model was not there in my head. Okay. But I will not discourage anyone not to start with 50,000, because I will quote from Jack Swagger, Market Wizards, the top traders who have come. They've all become bankrupt at least once, some twice. So in bankruptcy also there is a journey. The
Hmm.
journey to preserve us. You need to preserve yourself, right? And if you ask today's traders, or if you'll ask tomorrow's traders, I will still say, come with a 50,000, lose. You are going to lose, but enjoy that journey and the learning, right?
Hmm.
Because the learning has a cost. Very rarely you will become successful at one go. So this is the way you can overcome in the markets,
Right.
by learning. So
Hmm.
don't give up your learning by giving up that 50,000, because everyone, that money is important, but market teaches you that detachment, that I have to give 5,000 if I want to preserve my 50,000 capital as losses.
Hmm.
So the concept of stop loss is only born after you have lost your first tranche of capital. So I would
Hmm.
still say come, but if you ask me today, after 25 years, I would have said no, I'll not come with 50,000.
All right. So thank you for sharing your learnings and your wisdom. I truly resonate with that. Okay. So now I think we should gain some practical wisdoms from your journey and from your lens. So how do you approach the market when it gets choppy, and when you don't, when can't make a view out of it? What is the best thing that a trader, and what do you do and in that time?
So if it is in a range, right, what I look at is, the important thing is stay out.
Stay out.
So when you become an experienced trader, the very important thing in life, what is being taught is, don't trade when the probability is not with you,
Hmm.
right? So if I were to trade the range, I would only trade at the boundaries. I would not trade in the middle or the meat. So if you see, man, in last 35 days, right now, today is the 19th of June, Nifty is in the range of 25,100 to 24,500.
Right.
600 plus minus, it goes 100 points or 100 points down, but it's there.
Hmm.
So I know that till this range is not broken and sustained for 2 days, I must not get stopped out in this range. So you
Hmm.
will be believing me or not, last 30 days I'm waiting for the range to break out. I've not taken a breakout trade. And
Okay.
that's where the experience comes in,
Hmm.
right? Of not risking a breakout trade till the breakout doesn't happen.
Wow.
But I then another piece of advice, around 45 days you'll see a breakout. So we're very close to a breakout now in the next 5 7 days.
Okay.
So if you get this podcasted live, I think so people are going to benefit. Be ready for a breakout or a breakdown below 24,400 closing. The next day it sustains lower during the middle part of the day, or above 25,200 closing, and the next day it sustains above that high of that day and the middle part of the day.
Hmm.
That's going to be a breakout, and this time it's going to be a very big breakout.
Okay.
Straight 700 points up or down from there.
Wow. Wow. Thank you so much. Thank you so much for sharing that. I think we should wrap this up with a rapid fire round, and yeah, it's going to be fun. So, um, you teach options, and I think this is a very controversial question, but I should ask this: that option buyer can never be consistently profitable. Do you agree or disagree?
Disagree.
Okay.
So I give you
One.
an answer that
Yeah.
if you are an option buyer on the expiry day, you have a very big edge because of gamma hulk. So if you're an option buyer only on the expiry day, you will succeed.
Okay. One technical pattern do you think which is overrated?
I would say it is head and shoulder.
Head and shoulder. Retail traders should stop doing dash immediately.
So retail trading should stop doing option buying of out of money in the
Okay.
beginning.
A trader should never trade when dash.
In a range
One trading myth you'd love to destroy.
that 90% of the traders lose money.
Okay. So thank you so much. That was it for our episode with Chetan sir on the Genius Wealth Show. Thank you so much, sir, for coming and sharing your wisdom of the last 25 years. We are so grateful for all the learnings that we have got in this past 25 to 30 minutes. We are extremely grateful, and we hope to have you soon again on the Genius Wealth Show. Until then, thank you so much and have a great
Thank
day.
you, Imani, and keep going and keep growing. That
Thank you.
are two wisdoms for you. Don't stop here, and I think so. You have a great future ahead.
Thank you so
So
much.
don't stop at all.
Thank you so much. And thank you
Thank
so
you.
much for watching this